Hey, it's Tom here, and welcome back to another episode of the Investing with Tom podcast. Now, in this episode, I speak to a super investor. I speak to Guy Spier. He is an investor that I've been following for several years now, so really excited to get the chance to speak to Guy in this episode. Unfortunately, Guy is sort of coming off the back end of a bit of a head cold, so this is a slightly shorter podcast episode than we had initially planned, but Guy has assured me that he will return to the podcast in a few months' time for a full session. So, nonetheless, it was a really, really good discussion with Guy. We covered his evolution as a value investor in terms of starting out, just really looking for very cheap companies to purchase into, to shifting more towards now buying high quality assets that he can hold for a long time while minimizing frictional costs. And we also talked through his recent interest in more modern style businesses, particularly very fast growing subscription revenue type business models, where more traditional ways of evaluating intrinsic value for business and so on don't match up quite as nicely. So it was really interesting to cover that with Guy. We also talked through his workflow and how he typically spends his time and researches companies. We covered the lunch that he had with Warren Buffett and where he partnered up with Monish Babrai, which was around 15 years ago now at this point. So we talked through some of the lessons that still stick with him to this day around that lunch. So great conversation with Guy Spier. I should say we also had a couple of technical difficulties through the middle there. So if you see a few jump cuts and things, that is what's going on there, but please bear with us. Really enjoyed chatting to Guy Spier, and without further ado, let's roll the episode. Guy Spier, welcome to the podcast. I've been looking forward to recording this one for quite some time now. So thank you for taking the time. And how are you?
It's a pleasure to be with you, Tom. And the only part that's not a pleasure for me is that I'm recovering from a head cold, which I discovered a couple of days ago was not coronavirus. It's just a head cold. And but other than that, it's a pleasure for me too. And it's amazing that this technology allows us to connect over such extraordinary distances.
Mm-hmm. Yeah, 100%. I've been following you for several years at this point. I read your book, which I think I remember posting on Instagram or something when I was first getting the Investing with Tom channel started, saying, this is the best investing book I've read all year. And then I reread it towards the end of last year. And it's funny, sort of the extra things you also kind of pick up the second time around. So I'm a big fan of yours with your investing lessons and your life lessons, I should say, as Stig mentioned on a recent interview with you. So I know we're a little short on time for this one because you are still feeling a little under the weather. So I'm keen to kind of dive straight into it. And one of the things that really interested me when I reread your book kind of late last year was the evolution that I can sort of see in how your investing strategy has kind of changed over time. It seems that in the earlier days, you were looking for things that are really cheap, as a lot of kind of early value investors do. I've seen you write more recently about how you kind of see your job now as buying higher quality assets and minimizing frictional costs, essentially. And just in the past few months, I've seen you start talking about more modern businesses and starting to think about TAM and competitive advantage and so on, and how a lot of companies are value traps and people don't quite realize. So could you maybe speak to how your thinking has evolved in that area over time?
Yeah, isn't that scary? Like when Guy Spier starts talking about infinite TAM, something's
Yeah,
changed in the world, sort of scary.
absolutely.
I mean, all value investing is intelligent investing, and we got to it's not keeping up with the styles and trends, with what people are talking about, with what's fashionable. It's keeping up, I guess, with where the business world is going. And you know we have to understand Warren Buffett and Ben Graham and Walter Schloss and the environments that they existed in. And even Ben Graham, who talks about buying nets, his biggest winner in his portfolio was Geico. And I think there's someone smart who's written about this and said that the only reason why he talked about nets was that he wanted to give investors something that was pretty formulaic, that would work. And so even by the time that Ben Graham was writing The Intelligent Investor, his own investing style had moved on a little bit. And so, and then we get, you can imagine Walter Schloss having a conversation with Warren Buffett, where Walter Schloss says, I only buy things at below net current assets. And Warren Buffett is saying, take a look at General Foods. I mean, it's not below net current assets, but you should see the cash flows that are coming in, or similar with newspapers and what have you. And I think that my adjustment and reevaluation of infinite TAM businesses or unit economics or these businesses that SaaS businesses where you've got the subscription model and you've got lock-in to the power of lock-in, which is just insane in some of these businesses where you know that once the company's got the customer, they're never going to give them up. It's taken me a long time to realize that this is a very fruitful place to research and investigate. I think that some of the people that you and I have talked about, I mean, I think I introduced you to Jeremy Deal. He got there faster in a certain way. And there are others, somebody who's here in Zurich, Rob Vinal, who got there even earlier than I did, if you like. So, what did Warren Buffett say? Or either Warren and Charlie. You have to destroy your best loved ideas. And so and it's kind of been painful for me to say, but those are my best loved ideas. I'm not going to destroy those. And then to say, yeah, well, perhaps you must. Now, having said that, I think that so my thinking is adjusting, but I still think it's treacherous out there. And just because I'm more willing to evaluate and look at these kinds of things, like customer unit economics or businesses where if you break it down by customer, you can see that it's an extraordinarily profitable business, but because it's growing so fast, you don't see much cash flow or revenues today. Having said that, I think that there are plenty of wannabes businesses that sort of seek to fill that idea but actually aren't. And the most obvious one that I think has been talked about a lot is WeWork, which I think most people agree now it turns out is just a simple real estate business. And it's very, very different to some of these other companies that we might be thinking of. And what I would say is that I have not actually bought in size any one of these kind of newfangled new economy businesses. There was a second part to your question. Yes, the sort of the buy and hold. Tom, if I were to look at things that I've sold in the past, if I just hold on to those things, I think that my returns would be better than they are right now, which is a shocking idea. And at the time, I was so sure that I was doing the right thing. But at certain points, the credit ratings agencies that I've sold, one I was forced to sell because it was being bought out. But at one point, I sold Moody's and should have never sold Moody's. At one point, I sold Crizzle and should have never sold Crizzle. And so, yeah, they just like holding on. And I think that part of what makes that easier is that I'm really the cost of investing with me keeps going down because I keep bringing out these new share classes which charge people less and less money, which means that the investors get to keep more and more of their money. And so I don't feel uncomfortable with this buy and hold strategy. It's not this feeling of, oh my gosh, I need to demonstrate to the investor that I've done something for them lately, because I can demonstrate how my costs are way lower and keep driving those down. My attempt to be a little bit of an Amazon, or a Costco.
Mm-hmm. I like it. And one of the things that always impresses me, and we actually have quite a few questions from YouTube along these lines. It's basically, how does Guy possess this superpower of never selling anything? We look at your
Yeah.
13Fs and that sort of stuff, and there's
There's
just
nothing
nothing
going
going on.
on.
Is Guy skiing, or what's happening here? Is that
Well,
is that a learned skill, or do you think that's sort of an innate
so
sort
first
of?
of all, what you need to know is that my 13Fs don't cover all of my investments. They only cover the investments that are in the United States. And so there are positions that are outside the United States. And I guess I think it's public knowledge. I guess I'm going to share it. I own a very substantial position for my fund and in an Indian company called India Energy Exchange, which won't show up on those filings. And I own a substantial position for my fund in BYD, which is in Hong Kong, and also those don't show up. So just that you know, it's not the full portfolio. Um, but is it a superpower? You know, uh, I don't know, but I think that there's a significant portion of nurture. I think there is a significant element that comes naturally to me. I do really do think that the fact that I'm a scatterbrain, even the simple act of effectively picking up the phone and executing a trade is too much for me to kind of figure out. It's hard to change the world when you can't find your keys, type of deal. But that's not entirely true. And then I guess I consciously think about a very, very powerful bias towards inaction. So I cultivate that inside me, and unless I mean, I think another part of it is that I've seen investors who are way more sure of themselves than I would be with similar knowledge, if that makes sense to you. And
Hmm.
so with the same knowledge as another investor, just say this hasn't risen to um, a level of significance that requires me to make a change, if you like. What I think that what's really important for the audience to know is that don't worry about it. In this way, you can't. So the stuff that's nature, you can't you, you can't change that. It's your nature. But if you wake up with the intent of being a certain way, I think there's enormous changes that can take place in one's orientation towards trading. Having said that, I've never been excited by casinos. I mean, I walk into a casino, I find that some people are utterly excited by it. I find it the most mind-numbing thing I've ever seen because all the odds are against you. Why on earth would you even do that? But plenty of people do it. The colorful lights, I don't know, the suede tables, whatever else is going on, they want to do it. So maybe there's something about that mindset that I just completely and utterly don't understand. I don't know if that
Hmm.
helps.
Yeah, no, I'm on the same page as you there with the casinos as well. I'd be interested to know if there is such a thing for you, what a typical kind of day might look like, in Guy Spier's investing world. Is it, there's obviously not a lot of activity happening day to day in terms of, or month to month, or year to year, sometimes in terms of
Yeah.
trading and so on. But is it really about trying to understand businesses? You mentioned before we hit record here that there's some pretty wild swings in prices of particular stocks at the moment, and ideally, it's best to understand the businesses well before those swings happen.
Yeah.
So, is that sort of how you're spending your time?
I love the way I work, and I certainly could be more efficient. But there's a rhythm to it that actually works really, really well for me, surprisingly well, I think. And so and I've really been influenced, and you should write these down because there's many resources available on this, and it's worth. I think that you could do podcasts on this, or people listening to this could go and find those resources. So there's a book by this guy Sonke Arons that describes the Zettelkasten system very well. But actually, I think that what makes the Zettelkasten system work is this idea of spaced repetition, which goes deep into the way the human mind works. And the basic idea is that when you're learning something new, you need to remind yourself of it often. But the more you know it, the less often you need to remind yourself of it. So there's something called Anki cards, which um, it'll space out the repetition of the idea that you're trying to commit to memory. And it takes a look to see how well you're remembering it. And the better you're remembering it, the more spaced out it repeats the idea back to you. And so, why on earth is this why on earth is this valuable for investing? Is that, I mean, in a certain way, what we're doing is that we're sifting through many ideas, but they're complicated and they're intertwined into people and personalities and business models and markets and companies, and so it's a very complex territory that we're trying to navigate, and we're picking up clues along the way. And the clues could be everywhere. The clues could be in the annual reports, but they could be from the moves of other investors. They could be something that we read from the general news. And so, how do we work with all of that? And so then I want to bring you another individual who's I've watched many of his videos, and I think he does an extraordinary job in teaching people how to do note taking. It's somebody called Tiago Forte. I've never met him, but he's available on Twitter and on YouTube and what have you, and he runs courses, and he has a system called Para, and I don't know, so projects, areas, resources, and archive, I think, which is the way I organize my Evernote. So I use Evernote quite extensively, and so another concept that he's taught is this idea of when we're doing research, what we're actually doing is we're taking care of our future selves. So as I sift through various materials, the question becomes, what would my future self like to know about this that will redirect me? And so I'm using multiple different systems to jot down or remind myself of what is interesting to me and what is resonates for me, what is significant about this world of investing that is important to me, so that I can pick it up again at a later date. And so there's also an element to what I'm doing, which is a bit like being a squirrel, in that I'm hiding nuts all over the place. So I hide nuts in all sorts of ways. I love Moleskine notebooks, and I have two of three of them operating at any one time. And so, I mean, so I write, it's a kind of like a strange system that works really well for me, is that I write on random pages. So some pages look like this. I don't know, let's just turn a few more of them. That I put some cars in there. That resonated for me. These are electric cars that have been made by old cars. So sometimes I just post stuff in there which is completely random. So I write notes on the right side, and then when I go back, and it's just what comes up for me. I mean, I happen to stick in this one the review of William Green's book, but then when I come back, I can write. Oh, so here's something, World Green Boots Alliance, where I just stuck in. Clearly, they want to take over the planet, and they're kind of showing this is a map that they'd shown, and that really resonated for me. What's the point? Then I could come back, and I could write notes next to this as I flip through. The point is not to be complete or accurate. The point is just to have reminders for myself. These are kind of nuts that I can come back. And then what I do is I have a kind of like an unfolding index in the front. So the index, the pages are numbered, and then the index here, I've got Coinbase wallet on page 23. So I actually created a Coinbase wallet the other day. It was some time ago, so I should be careful flashing this past the screen, because this would be my password for the Coinbase wallet. And then I have ROIC discussions, and I have three different pages where I've got ROIC discussions. Then I was jotting out ideas for our holiday card. I don't know if you saw it. And then I wrote a review of Dory Clark's book, The Long Game, and there was something there. So the point of this is really, so then I would just share with you something else. So I kind of like figured out that with paper, I like working with paper. I kind of file things under, what is it? In the office, it's now, later, sometime. So there's three columns of shelves, and it's now, later, sometime. And so I find myself going through all the stuff that gets printed out. And then what I will do is I will, I like it being my paper and tearing it apart. So here's, I recently became a Swiss citizen, so I've got a vote. So I got this. This is my home office, by the way. So, but so I mean, I recently received the annual report of Qualcomm, so I haven't yet read through this, but what will happen is I'll tear out the bits that are relevant. So this was from the what is the name of the publication again? Foreign Affairs, and there was an article by Fareed Zakaria on the new China scare, and I've kind of taken notes on this one because I thought it was valuable, but it was so valuable that I want to review it. So I tore it out, I stapled it together, and and then I toss it into my now sometime or now later or sometime pile, and I know that it's going to come back up for me. And so it's kind of like there's the opportunity to discard things that are not that relevant, but the opportunity to come back and ruminate over on other things, and that's kind of like a constant process for me. And it also links into various watch lists that I have set up on Bloomberg, which will again generate sort of reasons to be looking at something. So then, you were asking how I spend my day, but I've never felt more comfortable and confident about my about the research that I do or the way I manage myself through my day. And all this stuff is all very useful for me because I'm finding ways to loop myself back into my mind in the relevant way so that my attention doesn't kind of disappear down a rabbit hole. It kind of comes back to these markers that I've left all over the place for myself. So then, what I would add to that is that I've changed my mind on. So that includes conference calls. So I'll print out, the transcripts of conference calls and obviously read those and other elements around a company. But then I'm trying to integrate social media into that. So, for example, if I find if I find an analyst who's made interesting comments on a conference call or asked good questions, I'll look them up on LinkedIn and send them a LinkedIn request and connect into them directly. And then I will add them into, so in my Salesforce database, I have, I will group in each investment that I have or potential investment is classified in Salesforce as a quote opportunity, where you can imagine that there's kind of a crowd of people around that opportunity, which is the people that I might want to talk to about it. And there could be anywhere from 2 to 20 or 30 people around that opportunity. And so, for example, somebody who asks a good question on a conference call, and then I connect to them on LinkedIn, and then I add them into the database around that particular company. I just did it around somebody who asked a question on Tencent in a conference call. And then when I have insightful bits of information or insight that I think are worthwhile, I'll share it out to that group of people in the interest of generating insight back. So I think that, I've started off talking a little bit about what Tiago Forte would call a personal knowledge management system. And then I move on to how does that interact with the broader world? And there's a way in which I try to interact with not the broader world, but as a set of investment analysts and people who can help me understand the businesses that I'm looking at. And that in and of itself is just a full-time job. And I'm also now looking for things in the office where I can standardize a process, because then I can delegate it out. And other people on the team can do it, and we can generate more insight and knowledge. So that's how I'm kind of like trying to manage myself. That's a bit of my personal knowledge management system. And then in terms of managing my day, my life has changed quite a lot since I've gotten Chantal, my executive assistant, into the picture. She's awesome.
Who's fantastic, by the way.
Yeah, she's just an amazing lady in 1,000 different ways. And thank you, Chantal. Chantal, you're on social, you're on YouTube, wherever you are now. But we won't say her last name so that we don't have to identify you as. But my general modus operandi is to leave myself space in the morning to think, and perhaps like now I'm writing my annual letter, to write, and then to kind of do busy work towards the middle of the day and in the afternoon when my brain's a little more frazzled anyway. And I try to do sport at the beginning of the day, and then hopefully I come home. And I actually, what I'm very envious of is Vitaly Katzel-Nelson, who I think writes he certainly writes way more than I do, and I'm envious because I think that I ought to write more. He gets up really early to write, and I think that one change that I want to make is just try to get to bed earlier. I think that my life would be so much better if I just got to bed by 9 p.m. every night. And
Hmm.
that's changing a little bit because we no longer have children at home. It used to be really hard to get anything done in the evenings because I'd have the children around. Now they're all in boarding school, so I don't see them all that much. But how'd I do, Tom?
Yeah, that's quite insightful actually. If I had imagined what Guy Spier's workflow looked like, I don't know that I ever would have pictured a combination of Salesforce and notebooks with various bits of scuttlebutt in them, I suppose. So it's very interesting to learn
Yeah,
that.
yeah.
Um,
And
Guy,
then
one,
I could go on,
yeah.
but because look, this is well, it's actually Alibaba Group, and so I'll print out the annual report, but then I'll rip away stuff that I think is irrelevant. I don't want to read anymore, but I'll hold on to things that I think I do want to read again. I think my point to the listeners and to you is that there are some things that don't need to have to be reviewed more than once, and some things it's probably okay to review them multiple times. Like this
Mhm.
essay by Fareed Zakaria, I still haven't gotten the grip of it, and I'm trying to get the grip of it. And so this kind of spaced repetition, rereading certain things, that Walmart thing. So I flipped through it, I saw it, and maybe that will trigger me to go and pull down some more Walmart stuff. To not Walmart, sorry, Walgreens. It'll
Mhm.
make me want to pull down more stuff. But you know, at the end of the day, I'll just pause and say this: I'm not best practice. I'm just one example of a guy who's trying to grope his way in the dark.
Mhm.
So
We're all doing the best we can, Guy.
exactly,
um, I know you need to run because you're still feeling a bit under the weather. But one last question, if I may. One of the things you're perhaps most well known for is actually something that happened, I believe, around 15 years ago now, which was the Buffett lunch we teamed up
yeah.
with your friend Monish Prabrai, who I'm also a big fan of. And I'd be really interested to hear kind of, all these years later, whether there's anything in particular, a lesson from Warren that maybe still sticks with you or resonates with you today.
Yeah, yeah. So Tom, we can go for another like 15, 20 minutes. We don't have to stop at the top of the hour. I'm feeling pretty good. So I don't know if
Fantastic.
that's okay with you. But so you say your question was, is there any particular lesson from Lunch with Warren Buffett? And my answer is all of them. I really, I am I owe a debt of gratitude, first of all, to Monish Pabrai. Had I not met Monish Pabrai, that launch for me would never have happened. And it was the beginning of an enormous, enormous transformation for me. I also need to say that um, I got a double benefit from the launch that I don't think Monish did. In that, well, actually, Monish got a double benefit in a different way. I got a double benefit in that the learning that I got from Monish was obscene, is obscene. Um, Better in many ways than the learning I got from Warren Buffett because obviously I had an enormous amount more exposure to Monish, and I'm so grateful because I got to Monish got to me early enough in my career that I was still capable of making changes, and even then it took me a while to make those changes and felt like a total idiot when I realized it and only made the and these are kind of not just changes to the structure of the fund, for example, charging zero management fees, but changes to my whole of my whole orientation towards business and the way to interact with people. And there were lessons that took, um, I needed repeated doses of the lessons, and so it was only through the friendship with Monish that I could get those repeated doses. And it's fun for me to do that. I really had a front row seat with Monish, and I could probably write um, a good essay or two on the lessons I've learned from Monish. But then to Warren, which is of course just one lunch. I mean, at the end of the day, I've spent many hours with Monish. I've only spent, to call it. So he saw us subsequently a couple of times one on one. So call those times an hour and the lunch 3 hours. So I've spent one on one time with Warren like total less than 5 hours for sure, maybe only 4 hours. Um, but the the lessons just in a certain way keep coming, Tom. They just keep coming. And I think that what is really fun for me is when I realize something and I put it into action myself. And so I'll give you one example of that was just so much fun. Actually, I mentioned it in my Value X conference, and I got a unsolicited small pattering of applause for it, which was fun. And so I'll tell you the brief story. So I get a group called a group out of Saudi Arabia, an investing podcast out of Saudi Arabia, gets in touch with me, and they want to interview me. And I have the wherewithal to say, nice to meet you. I'd be delighted to interview with you. By the way, I have this friend, Aziz Al Naim, and he's Saudi and he lives in London. Would you please interview him first, and then you can interview me? Or you could interview us together. But Aziz was not as well known as I am, and he totally deserved to meet those people and to be on that podcast. And it was just so much fun. The podcast very quickly went to, on YouTube, 10,000 views, and it was an enormous promotion. It kind of like helped Aziz, and I feel like I was doing something for Aziz that was like, there's no amount of money that can buy something like that, because you're giving somebody a gift that is precious that they can't return on. And what inspired me to do that was the story about Warren, in which, and I may have to look it up, in which Forbes wanted to put Warren Buffett on the cover. And Warren Buffett said, I've been on the cover of too many magazines too many times. Here's the CEO of my favorite bank that I have a large shareholding in. Why don't you put him on the cover? And Forbes came back to him and said, no, we want you on the cover. And they ended up negotiating a deal, I believe, where there were two covers. It was a special edition, and the CEO of the bank was on the very front, and then Warren was behind, or the other way around. And so you can imagine that the CEO of that bank, first of all, his reputation was, varnished in, gold glitter in a way that otherwise wouldn't have happened. You can imagine what kind of friendship they developed as a result, and what kind of loyalty he would have to Warren as a result. So, that come up specifically at the launch? It didn't, but I think that it's a lesson I learned better having had the launch with Warren. So, it gave me the opportunity to intensify in my mind what he's like, and to intensify that my connection to him, that allowed me to see his actions with a little bit more force and to want to follow them a little bit more strongly, if you like. So, and I would tell you, Tom, that I just keep. He sent me a holiday card this year, which was like, he doesn't send me a holiday card every year. I don't know why this year was special, but he did. And what he did was so clever, because it was at once a holiday card, but it's also designed in such a way that it can be framed and put up on the wall. And he wrote a personal note to me, and I looked at it and thought, wow, in relation to my holiday card, which is quite a production. I mean, I really enjoy it. It's quite a production. I thought, this is simple and actually achieves a lot more. So, I keep seeing the deep thinking behind even the most simple actions that he takes. I would tell you that perhaps a third one, just to round off my lengthy answer to your question, is that when you identify somebody who's got a lot to teach you, don't worry about the time and money that you spend to get in their presence. The time and money, effectively, Monish and I had identified that Warren could teach us stuff, could still teach us stuff, and we spent money to get into his presence, and that was a worthwhile expenditure of money. So next time you or somebody who's listening into this gets that invitation to something, the other side of the world, from someone that we really admire, don't use the distance as an excuse, or the cost of getting there as an excuse. Do it. You won't regret it. That's your destiny in a certain way, and you make your destiny happen by traveling to those things. When it's kind of like a modern, updated idea of what a pilgrimage is. Why do people go on these pilgrimages to visit or be in the presence of their master? It's because being in the presence of that master can actually change your destiny. But how many people don't go on the pilgrimage just because it's too expensive, it's not convenient, they don't have the time, and so, if you're Muslim, you're told to go on a pilgrimage to Mecca to visit the Kaaba. We probably each have pilgrimages that we can make. We could each write 3 people down. I mean, I guess one that I have not made is, many people visit the Daily Journal meeting so they can be in the presence of Charlie Munger. And don't forget that when you go on that pilgrimage, on the way there, you're thinking things and you're updating, you're taking decisions, and then you're in the presence of the master, and then on the way back. So it's not just being there, it's about all the decisions that you make leading up to it and going away from. And my launch with Warren Buffett, I mean, one of the decisions I made was to introduce these zero management fee share classes. And I don't think that if I had not committed to the launch, I might not have changed those share classes. I mean, the short story is that I was so afraid of, I'm about to sneeze, or maybe I won't. I was so afraid of being the one guy at the launch who was the highly paid, overpaid hedge fund manager, and both Warren and Monish Monish was, Warren being paid $100,000 a year in spite of running a multi-billion-dollar corporation, and Monish with his zero management fee share class. I would have been the highly paid. I didn't want to do that, so I had to introduce the share class before I got to the launch, and that took significant effort on my part. I had to really remonstrate with lawyers and what have you. So the power of using, I mean, I call it pilgrimage, the power of using meetings with people like that to affect changes in your own life is, I think, perhaps a general lesson that one can take. How'd I do, Tom?
That's fantastic. Thanks for sharing that, Guy.
Yeah.
If you're happy to keep going along,
Yeah.
I'd like to jump over to YouTube. I mentioned to you beforehand, I put up a community post on YouTube asking for some questions for this, and
Yeah. Absolutely.
looks like we've got over 100 of them, so we won't get won't get through all of them, but I'll give you a couple of the ones that I had the most thumbs up. So the first one we have is from a friend of mine, Jason, who runs a podcast and YouTube channel called After Dinner Investor. So he runs his business in the daytime and invests in the evening, hence the After Dinner Investor name. And he's asking, what's the largest position you've ever taken in one stock in terms of allocation percentage? Have you ever made a 50% bet or anything like that? Thanks.
Yeah. I have never made a 50% bet. And here's where you really have to be careful if you're kind of asking many people this question, is that, it's easy enough for me to open up a brokerage account, put $1,000 in it, and then put $750 into one stock and say, oh, I've had a 75% allocation.
Yeah.
What you really want to know is what percentage of your net worth have you put into it? And, is this, does the person have net worth in the first place? Because if you have zero net worth and you're just taking a flyer and it doesn't matter. But if you, so the first thing to say is that Aquamarine Fund is 100%, or effectively, now I've taken some money out to buy a couple of homes, but it's the vast majority of my net worth. I don't have other portfolios, positions, anything like that. So just be careful when you ask that question to people, what they're referring to. And what I would also tell you is that many people, I think, will not answer honestly, or they genuinely have not done the accounting properly in their head. So they may not be intentionally misleading you, but they just haven't thought it through. And, compartmentalized financial thinking is a very, very real thing. People think in terms of, so just be really careful when you hear people say that. So having said all of that and given you as an introduction, in the one I have a Charles Schwab portfolio that has a minuscule proportion of my net worth. And in that Charles Schwab portfolio, I have about 100 stocks that I buy 1 or 2 shares of in order to receive the annual reports like I just showed you. So why did this come through my door? Because I bought a couple of shares of Qualcomm and it comes through my door. Why do I tell you that? Because it's another part, just referencing back to the previous question, it's another part of that creating loops, the kind of where things come back to you so that you can reevaluate and remember. So Qualcomm, once a year, I'm going to be reminded that Qualcomm's a company that I could invest in if I wanted to. So, but coming back to the question, never invested 50%. I do believe that in Horsehead, which was a company that went bankrupt, I had 10%. And subsequent to Horsehead, I would never invest at initial cost more than 5% of my fund into a position. And I consciously know that that is going to reduce my returns. And that's just fine because what I'm into is longevity. Into staying in the game and making sure I can stay in the game. And that requires me to manage my own psychology, but also to manage the psychology of my investors. And so that is a very comfortable place for me. And I would not do 10% again. And I've had a number of times now when I've invested in something that's gone down 50% and it hasn't bothered me in the slightest. And I just keep track of. I might add to it, but it is a very dangerous place when you've got made something 5, 6, 7, 10%, and it's declining, and then you want to add more, and suddenly you've poured half your portfolio into one stock, and maybe your judgment was wrong. So um, keeping that kind of mental balance and finding ways to keep your mental balance. And as kind of a visual way of thinking about it, Tom, for me, that somehow works, I don't know why, is that when the position is kind of like up to 5%, kind of a 1% position I feel like is down below me in size. Then a 5% position is sort of coming up to my waist, so to speak. And then a 10% is above my head. And I don't want positions above my head. I want them kind of down there. When I put 1 or 2% of the portfolio into Alibaba and it goes down 50%, I am just not bothered. And I know that I ought not to be bothered if I'd allocated 20% of my portfolio to it and it went down by 50%, but it would bother me. And so that's me managing my own psychology. And I think that you know, this feeling of jumping off a cliff without really knowing where it'll end is never a good thing, I think. So, you don't jump off cliffs. We carefully walk down, picking a path, finding a way to go. And if there's I think that if somebody's saying, "Oh, you're a scaredy cat and you don't have big balls and you're not swinging for the fences when you ought to swing for the fences," that's kind of a voice that one should probably ignore, I think. You know, just focus on, imagine you're walking down a cliff. You don't want to jump and hope it's okay on the other side. Either you don't walk down the cliff, you certainly don't jump, or you wait until you find a path, and you find a path that's safe, and then you take that path. And most of the time, we're not going to find anything to do. And one other thing that I would tell you, part of, again, it goes back to a previous question of yours. Um, why do I find it easy? I don't know if I find it easy, but why am I doing nothing? Is that I think I have a pretty good fortress, a fortress that's going to carry me through whatever this time is in the markets, and will get me to the other side okay. And I like my fortress, and I know it well, and so kind of I don't want to switch fortresses too often. And I like the fortresses I've got. So um, it would have to be really, 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 really good. And I think that I've written in the past, it's interesting. So Netflix took this huge decline, and I probably haven't done enough work on it. And I know some people and I'm a huge fan of the CEO. Um, but at the time that Netflix ought to have been bought 20 years ago, there was only Netflix, and now there's all these other streaming services as well. I don't know where that goes, and I don't have to figure it out. It's yeah, and I'm fully invested, so not much happening. But sorry, I think I went off topic there.
No problem at all. Just a follow up on the position sizing thing. Um, so you're saying you're comfortable with, call it 5% at cost with a lot of
Yeah,
positions you're putting on, but I know, and obviously in many cases those positions grow up a fair bit over time, and some of them do really well and grow to a larger portion of the pie. How does
yeah.
your thinking evolve when that happens?
I mean, it's really tough, isn't it? Nobody said it should be easy. And I think that when you have new investors coming in, you need to let them know that they're buying into a portfolio that has some, I call them appreciated positions, and it's kind of like in a certain way unbalanced. You're buying into that. That's the way it is. Uh, and I think that the key question is what does the runway look like, and is it still sliding down a long runway? Because if it is, you just hold on to it. I mean, I saw a presentation that was made to a Turkish company recently, and it gave the example of NVR Homes, which is this home builder in the United States that have been, insane cannibals, and over the last I don't know how many years the stock's up I don't know how many times, and you just gotta, when you find those things, you just gotta hold on to them for dear life. And so why would I do any differently? You know?
Yeah, NVR is a pretty wild one. I've read some write ups from interviews with Norbert Liu of Punch Card
Yeah,
Capital, who was
yeah,
very early in NVR with his mum's retirement account or something in the
right,
'90s, and it's been more than
right,
100 baggers since.
yeah.
Fascinating
And
company.
I'm ashamed to say that I've not got any 100 baggers in my portfolio, but I live in hope. I
Yeah,
live in hope.
there's still
You
time,
know?
guy.
Yeah, exactly. And
Um,
look, what in my case, and I think maybe for many people here, Um, yeah, would it be nice to have multiple 100 baggers in one's portfolio? Yeah, it would be nice to be Tom Brady in the United States, the quarterback for that football team in Austin, or it would be nice to be Adele, who just won some award in London. But we got to set ourselves up for the possibility that we're not. I don't want. This is actually what I'm getting at is an idea that I'm not going to be able to express very well, but it's this idea of ergodicity, and so now I'm using terms that I don't really understand, but you know you don't you we want to be the person who can do well. It's far better to be highly likely to do okay than to have a one-off shot of being extraordinary, but then in all other versions of the world you're not a failure. And so our goal, or I would argue our goal ought to be, and my goal certainly is, not to shoot the lights out. My goal is to do everything I can to ensure that the probability that I don't get a satisfactory outcome is vanishingly small. So, why not take a 10 or 15% or more position? Because it increases the probability of a wipeout. And the only thing I need to avoid is wipeouts. So, yeah.
I like it. I think that's a good place to wrap it up. Actually, Guy, I
Yeah.
really appreciate your time, and I'd better let you get some rest by the sounds of it as
I
well.
really I really appreciate you letting me jump off. And I just want to tell you that I'm really impressed with what you're doing with your YouTube channel and your podcast. Who'd have thought that we live in a world where Mr. Tom Botica in New Zealand, which is of course the center of the universe, it's the rest of us who
Absolutely.
are like in all these other places, and can run a podcast and YouTube channel that is being watched by people around the world. I think that's really extraordinary, and I think you're doing a great job, and you're helping a lot of people. So, thank you for doing that. And I happen to notice the question, "When am I coming to New Zealand?" That is a great question, and I'm going to ask my wife. I would tell you that we're already spread a little thin in that my wife is currently in Mexico visiting with her mother, and I'm in Zurich, and our three children are in London. But we'll be together in a couple of days, and I will certainly put the question to them because I would love to visit New Zealand, and I've already lived more than half a century and haven't been, so maybe it's time.
It could be a very good place to host a Value X conference potentially. Just putting that
That's
out there.
right. That's a good point. We'd do it with 2 or 3 years notice, so plenty of people can get ready and book their tickets. But
Yeah,
we can talk
100%.
about that offline and think about how to do that. It's an
Yeah, for
interesting
sure.
idea.
And just one final thing, Guy. I know you are starting to produce some content yourself with newsletters and podcasts and so on. Do you
Yeah.
want to tell the listeners where they
Oh,
can go and find
that's
that?
really kind. You can always find me on Twitter. I quite like Twitter. G Spier is my handle on Twitter. And you know what's so I think that another idea that I learned from a friend of Tiago Forte's is a guy called David Perel. Oh, my cat just jumped onto the desk but went left. So is this idea of learning in public and putting your unfinished work out there and then using that to build. And I think that it's possible that investment research will merge with the kind of stuff that you and I are talking about right now, the kind of stuff that you're doing. And so I don't have any interest in developing any kind of online presence for the sake of monetizing it. But I am interested in developing it because I think it can help me with research and learning about the world and understanding. And this idea that you can put your ideas out there and put content out there and then learn from it is really quite tantalizing for me. And so whether it's on my own channel or on other channels, and I'm playing around with the YouTube channel. So if you type my name into YouTube, I'm sure you'll find me. But I'm also really enjoying going on other people's channels like yours. So that's, and I think that I'm more likely to spend more time on other people's channels, but I want to have a channel so that if I have an idea that I want to express, I can put it up there and then see what comes back to me. I would tell you, Tom, that I think that there are some people who are being a little bit too cute with it on Twitter, in which they kind of say, tell me the list of companies that you think will outperform in 2022, and they kind of just like, in a certain way, it's kind of a lazy question. And so getting better at formulating the right kinds of questions to ask in public and to get feedback on is I'm not saying that I have the answer, but my instincts tell me that that's not the answer,
Mm-hmm.
So
I like
yeah.
it. Well, Guy, I appreciate your time, and I will leave links to your Twitter and so on down in the description
Yeah,
if
thank you,
anyone
and
interested in.
see you in a few months. I'm looking forward to seeing you again. So for the listener, I really the first time, so we rescheduled because I broke my arm and I was having an operation, and then I'm coming out of this cold. I really didn't want to reschedule Tom again, and I'm not at the worst. I'm definitely coming out of it. So I said, look, let's do half a session now, and then in return for that, or concomitant with that, we'll schedule another session. So 3 or 4 months time, we'll get back together again, and hopefully at that point there'll be nothing wrong, and we'll be able to do a full proper session.
I'm looking forward to that. Thanks very much, Guy.
Yeah. Thank you, Tom.
Cheers. Thanks for watching another episode of the Investing with Tom podcast. If you enjoyed this episode, be sure to subscribe to the Investing with Tom podcast channel so that you can see future podcast episodes as soon as they go live.